Bitcoin has just confirmed a massive buy signal, which could result in a multi-100% rally in the coming months for Bitcoin. Also, ARK Invest is still out there calling for a 10x on Bitcoin. We have some big Bitcoin ETF news, some Ethereum news, so make sure to watch the whole video to get all of the goods. My name's Lark. Every day I make videos talking about cryptocurrency investing, so if that's a topic you would like to learn some more about, make sure you subscribe to the Lark Davis channel. Gently tap on that thumbs up button for the YouTube algorithm, and of course, click on that notification button so that you know when I put out a new video. Now let's go ahead and take a look at the charts to get started off with here today. Here it is. Here's our buy signal, guys. This is the golden cross. It's happened. It's official. It is confirmed. We've got a golden cross on Bitcoin. That is, of course, the crossing over of the 50-day moving average of the 200-day moving average. This is definitely nice to see. Now, what is the history of the golden cross? How often has this proven to be a reliable indicator? Well, let's go here and look at the Brave New Coin Liquid Index for Bitcoin. It gives us some pretty good historical action here. So we can see the last time we got a golden cross confirmed, Bitcoin rallied by 700%. That was back at the start of 2020, May 2020. Now, we did actually get another golden cross right at the start of 2020, which ended up becoming a false signal because that golden cross happened 2 weeks before COVID. You couldn't have called that in the TA. But that's what happened. That was an unexpected macro event that drove the price down. So this golden cross ended up not fulfilling a massive rally, but that was because of an external event that happened. We had a golden cross back at the start of 2019 that saw Bitcoin rally over 200%. You actually realize when you start to look back how rare it is to get a golden cross for Bitcoin. It's only happened a few times in Bitcoin's entire history. We had a golden cross here, 2015. That started off what was essentially a non-stop mega bull rally for Bitcoin when the price went all the way from $300 to $20,000. Although it is very interesting to point out that in this situation, Bitcoin actually dumped just after confirming the golden cross, but then, of course, went on to form a much, much bigger rally. Remember, these golden crosses, these are lagging indicators. The simple moving average, it's less responsive to recent price action. That's why you can have a massive dump like that and still have your golden cross be in play. These are smoothing lines is how I like to think of them. The 200-day moving average is a very smooth line. The 50-day moving average, a pretty smooth line. Looking at these crossovers, though, historically, pretty damn interesting to see the price action playing out. Now, we did have a golden cross here as well in July 2015. That was a quite short-lived one, though. After a massive downtrend, we had a bit of a relief rally, and then that failed. But that failed right before the mega rally that was, of course, 2016, 2017. Now, we had at the end of the 2013 bull run, we actually had, after, of course, our death cross, we had a little tiny blip of a golden cross come in. That one resulted in a very short-lived bit of enthusiasm for the market, followed by what was a 75% crash in the price of Bitcoin. And then we have this one here. This was actually our first golden cross for Bitcoin here because this is the earliest trading history and the moving averages that hadn't actually set themselves up yet. But this was the first golden cross right here for Bitcoin. This was February 2012. That resulted in a 2,000% price rally for Bitcoin. So more often than not, we have seen the golden cross indicator acting as a strong buy signal. Now, there are situations when this has not been the case. COVID 2020. We had a golden cross, and then boom, 2 weeks later, COVID smashes in, takes the entire global economy down. Everything crashed. It just wasn't Bitcoin. Everything went down during that time. So we can discount some of these false golden cross breakouts. Now the question becomes, is this going to be the start of our double pump bull run? Are we repeating 2013 right now? I think we just may very well be doing that. 2013, of course, we saw a massive rally, massive rally, followed up by a very big price correction. Everybody thought it was all over. Then the price started moving back up. And bada bing, bada boom, we got a second blow off top in that rally. The price of Bitcoin rallied by over 300% in Q4 2013. I still think that's what we could be looking at for the end of this year. And if this golden cross is an indication, then we may very well be on the road to seeing that happen. So bullish on the golden cross, bullish on the golden cross. Let's hope that indeed we do get that beautiful Q4 price pump. We can believe, guys. Let's believe. Let's believe. Inject the hopium. Yes. It's coming. It's coming. Now, if you do want to buy yourself some Bitcoin, by the way, you need to have an exchange account to be able to do that. I recommend BINANCE. It is the best cryptocurrency exchange out there. Use the link down below to start your account. You're going to get 10% off of your trading fees and up to $700 in trading bonuses. Now, let's get into the news. I want to start off by talking about this chart here. This is the percent balance of Bitcoin on exchanges. Now, this is pretty similar to the liquid supply chart that I shared the other day, but man, this is just, I'm telling you, we are witnessing right now a generational shift in Bitcoin. So the last time the supply on exchanges was this low was actually February 2018, which was just entering into the bear market of 2018. So essentially, we saw a lot of people sending their coins into the exchange, getting out before things got bad, essentially. And then we saw coins just flowing and flowing and flowing and flowing for 2 years straight. All the way up until a peak sell-off. It's always crazy, of course, to realize this fact, but our peak sell-off, our peak supply of Bitcoin on exchanges came 2 or 3 days after the 2020 COVID crash. People were scared. They were getting out there, moving to cash. That, of course, in hindsight, proved to be a very wrong move, because that was the time to be buying Bitcoin. But thank you to the sellers, because the buyers appreciated buying Bitcoin at $3,000 or $4,000 back in 2020. Ever since that time, what has been happening? The supply of Bitcoin on exchanges has been steadily moving down. And it's only going to keep going in that direction for the rest of the decade, in my opinion. Now, that's a very interesting thing, too, because it got me thinking today. Right now, corporations are holding $7 trillion cash money. All that cash is being inflated away. We talked yesterday about the inflation that's going on. The US dollar inflation's going totally crazy. Holding $1 trillion in cash, man, that's a liability right now. That's a liability. If you're just sitting on all that cash, it's getting inflated into oblivion. 4 or 5% a year, it may get worse, but let's just say right now it's at 4%, 5%. Do the math. Move that up until the end of the decade. Move that up to 2030. How much are these guys going to lose by holding all of that cash? They need to diversify. They need to get some of that money out of cash. Now, here's the interesting thing. $7 trillion is a lot of money. It's a lot of money. Right now, there is 1.817 million Bitcoin sitting on centralized exchanges. it would only take 1.5% of that $7 trillion to buy all of the available Bitcoin on exchanges. The obvious dilemma here is that it's never going to be possible for them to buy all that Bitcoin at the current price. What happens when 0.1% of this money enters the market and buys up a couple 100,000 Bitcoin? What happens when 0.5% comes in and buys 600,000 Bitcoin? Then we only have 1.2 million Bitcoin left on exchanges. That's crazy. Let's go back to that chart for a second. Here we are. Look at what's been happening. The amount of Bitcoin on exchanges has been steadily falling. The price has been going in the opposite direction. So if we see even a fraction, not even a whole percentage point, but a fraction of this money coming into the market, it's going to have a dramatic impact on the price of Bitcoin. Remember, it only takes 1.5% of all that corporate money to buy up all of the Bitcoin on centralized exchanges right now. No one is bullish enough. No one is bullish enough. $7 trillion. It's a melting ice cube. Any of these companies that are in European markets might also be experiencing negative rates. So not only are they getting inflated, but they're literally having balances deducted at the end of the year. These guys need Bitcoin. They need Bitcoin. It's the best cash equivalent out there right now, except it's so much better than cash because cash is trash. Cash is trash. These guys can get into Bitcoin. Tesla's proven it. MicroStrategy's proven it. Square's proven it. It's incredible. Only 1.5% of that money would buy all the Bitcoin. That's insane. And what happens when all these guys start scrambling to get a piece of that pie? How high will the price go? And of course, once we have better options for people to get into the market, well, sky is the limit. Which moves us on to our story from ARK Invest. ARK Invest doubling down on their price prediction for Bitcoin, looking at a 10x for Bitcoin. Of course, that's a very common number we see floated around. That's the market cap of gold. That's your $500,000 Bitcoin. It's nice. $500,000, good round number. $1 million longer term, but we're talking, by the end of the decade, we can get up to that $500,000 Bitcoin. Now, what's interesting is that Cathie Wood was talking about how they're looking at investing in the market. 60% Bitcoin, 40% Ethereum, citing the confidence in Ethereum growing dramatically at the moment. Now, Cathie's reasoning for why the Bitcoin is going to go up so much, why Ethereum is going to go up so much, why ARK is looking to be 60% Bitcoin, 40% Ethereum. It's a lot of the stuff that we talk about on this channel all the time. Bitcoin is gold 2.0. Bitcoin seeing massive adoption from the institutional money crowd. Bitcoin's being adopted by countries. Ethereum is the home of DeFi. Ethereum economics are all flipping bullish. All that stuff. But it makes an interesting thought as well about the approach of big money towards the crypto markets. If you're a regular dude, a 9-to-5 dude trying to make it in crypto, you got to go and find those low cap altcoins. But for the big money guys, the institutional players, someone like ARK Invest, they can't play with $1 million or a $10 million market cap coin. They're just too big for that. But Bitcoin and Ethereum, they're nice, steady bets on the entire cryptocurrency market. You have to think, if these guys put, let's say, $1 billion into a 60-40 split Bitcoin Ethereum, what's that going to be by the end of the decade? $15 billion? $20 billion? There's a lot of potential here for these investments. Of course, ARK Invest has been investing in Bitcoin for a while now. They're already up dramatically on all of their Bitcoin and Ethereum purchases. So they've done very well by believing in this technology. But I think that you're going to see a lot of big money guys taking a rather similar approach, because you have to remember the liquidity is there only for a few of the top coins in the market. If you start going down the market cap here, you're not going to find the liquidity for these coins. You go down to coins under the top 100, It's hard to even cash out a few $1,000,000 of these coins without dramatically affecting the markets. Bitcoin, you could cash out $1,000,000 and no one's even going to know what happened. Same with Ethereum. That's why these big money guys are looking at Bitcoin and Ethereum for different purposes, gold and innovation. Bitcoin's gold, Ethereum's innovation. That's what they're looking at, and they're both highly liquid markets with incredible potential. Pretty cool. Also, in other Ethereum news, we now have over $1 billion worth of Ethereum, which has been burned since the London hard fork. It's incredible. It's incredible stuff right there. I just wanted to bring it up real quick because it's crazy. This only happened back in August. We're 6 weeks into it, and we've already burned over $1 billion worth of Ethereum. Zoom out a little bit. Think about how bullish that is long term for the economics of Ethereum. How much the price of Ethereum is likely to go up as we start to see supply going down. Once we hit the peak and then start reverting back down. That, of course, comes in with the triple halving, which comes along with the merge, the move to proof of stake, which hopefully happening in the not so distant future. But a bullish statistic for you anyway. The final story for today. This is about the Bitcoin ETF. Oh, when are we going to get a Bitcoin ETF? Some century, according to the SEC. Anyway, this story is about Fidelity. Of course, Fidelity, in case you're not familiar, they're one of the world's biggest asset managers. I think they're number 3 in the global asset managers. They're an absolute titan of the financial industry. They were in lobbying the SEC today. They are pushing very, very hard to get a Bitcoin ETF approved. Now, the reason I bring this story up is because Fidelity, unlike a lot of the other companies, they're not happy with seeing a futures-backed ETF being the ETF of standard. They want a spot-backed ETF, an ETF product that's backed 1-for-1 by Bitcoin. That's what they were in talking to the SEC about. They're arguing that, look, everything is there. There's no reason for you not to approve this. I think the only reason that SEC and Gary Gensler's SEC would not approve a spot-backed Bitcoin ETF product is because, he's a slave to Wall Street, basically. Gary Gensler, ex-Goldman Sachs guy, that's something to keep in mind. This dude's been playing ball for a long time, and yes, Gary Gensler does understand the crypto industry, but that's not necessarily a good thing. That doesn't mean he's going to be more favorable and not give handouts to Wall Street. And make no mistake, a Bitcoin ETF backed by futures is a handout to Wall Street. Now look, am I okay with a situation where both spot and futures backed ETFs exist? Sure, that's fine. That's fine. But you have to have the spot-backed ETFs because the futures-backed ETFs, those are junk. Those are junk made to manipulate the markets. I'm glad to see Fidelity out here pushing the SEC for a spot-backed Bitcoin ETF. I think that's mega important to have one of the world's biggest asset managers actually out there saying, hey, look, SEC, you got to pay attention here. And if they're going to pay attention to anybody, man, I hope they pay attention to Fidelity. They're a financial titan. So you'd hope that they'd be paying attention when these guys talk. Anyway, just want to share that with you. I hope, of course, we do get that Bitcoin ETF approved sooner than later. I think when we do get a Bitcoin ETF approved, that's how you get some of that $7 trillion of corporate money coming into Bitcoin, because it'll be so much easier for them to get it. That's also when we're going to see a price explosion for Bitcoin. And a futures-backed ETF could also be a bit of a spark, but nothing like a spot-backed ETF, because that has actual economic implications for the demand on the Bitcoin market versus a junky paper contract. Anyway, just my 2 Satoshis as always. Your question for today. Do you think that the SEC would ever approve a spot-backed Bitcoin ETF before they approve a futures-backed Bitcoin ETF? Let me know down below in the comment section. Thanks so much for watching today's video, and peace out till next time.